Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets seem poised for a positive start, tailing positive global setup. SGX Nifty at this point of time is indicating a positive start coming in for Indian equity markets. US stock ended higher as Fed and CPI data that looms large next week. Asian shares at this point of time remains to be seen how are they behaving, but World Bank has offered in a dim outlook for the global economy in the face of higher interest rates. Morgan Stanley sees Sensex at 68,500 by December on cool-off in commodities, rate hike pause. And if you talk about FIIs, they have bought shares worth around 385 crore and DIIs have sold shares worth around 489 crore. In terms of FNOQs that we have, 45 stocks overall have seen a long build-up. This is based on OI percentages. This includes the like of JK Cement, Maruti Suzuki, ACC, Tata Communication, Syngene International. And if you talk about the long unwinding, 28 stocks have seen long unwinding based on the OI percentages. These include Birlasoft, Escorts, Apollo Hospital Enterprises, Hindustan Copper, and Oracle Financials. These are the ones in terms of the FNOQs that we have. But let us get going and discuss some stocks and strategies with Rajesh, Palviya, Senior Vice President, Research for heading technical and derivatives at Axis Securities. Good morning there.
Good morning, Nickey.
A bit of caution setting into the markets right now. They've been holding up, but you could clearly see the range is right now pretty narrow. Do you think markets are expected to be at the sidelines ahead of the outcome, which can further provide a direction? With that in mind, what's the strategy would you like to suggest to our viewers right now?
Yeah, so ahead of this trade policy outcome, yes, market is consolidating in terms of indices. But if we analyze the broader market, stock-specific action, sector-specific buying interest is there in the market. So market is now playing on the stock-specific, and one needs to focus on the stocks as a lot of mid-cap, small-cap, and large-cap stocks are showing good traction in terms of buying. But looking at the data setup for Nifty, the support area is 18,500, very much intact as put writer base is there at 18,500. Even in the previous session, there was a dip, but put writers have sold put of 18,500 strikes. So which clearly shows that, the base has shifted higher. So till Nifty is holding above 18,500, there is no worry in terms of trend of the market. It's likely to remain on the bullish side, and one needs to deploy buy on dips kind of strategy in the market. Yes, some call writing activity is happening at 18,700. So once we able to take out this 18,650, 18,700, then possibly Nifty can also scale up to the new all-time high also in the continuation of this up move. So we are bullish, and to play this up move, we are initiating here to buy 18,600 call option, which was closed at around 55 rupees. We are initiating here to long this call option for tomorrow's weekly expiry, and we are projecting target of 100 rupees to 105. One can keep stop loss of 25 to go long in this call option. So we are bullish for Nifty. Buy on dips should be your strategy.
All right, so buy on dips is the strategy. 18,600 call options, one can go long on that one. That's the word coming in from Rajesh. But talk about the Bank Nifty index outperformance which has come through, at least the uptrend which has come through for the last 3 consecutive sessions. What do you make out of it?
So clearly, Bank Nifty is outperforming. Most of the large cap banking stocks have done well in the last couple of trading sessions, and most of the banking stocks are inching to their range high level. Short covering was there in Bank Nifty in previous trading session. 44,000 is the major put base at this juncture. Looking at the data setup, we believe that Bank Nifty can continue further more upside from the current level also. And in the continuation of this uptrend, we are projecting target of 44,600 to 44,800 for Bank Nifty. So again, Bank Nifty is also buy. If you get any chance to buy Bank Nifty around 44,200, 44,100 is a opportunity to buy on the decline. Keep your stop losses at around 43,900. Till this level is intact, buy on dip should be your strategy on Bank Nifty.
Sure, Rajesh. We're just going to be talking about the stocks and news, addressing that. Some of the picks that Rajesh has right now, of course, we'll touch base with him and on the levels, but it includes PVR, Inox, BEL, SRS, and Cummins out there. But let's address Adani Group of companies and the bit that is coming in terms of the development, where BSE has increased the circuit limit for 4 Adani Group companies out there. The circuit limit has been increased for Adani Transmission, Adani Green Energy, and Adani Wilmar. The limit has been increased to 10% from 5% earlier. For Adani Power, the circuit limit has been revised to 20% from 5% earlier. This is effective from June 7th. Now, this is an announcement which is coming for the revision in circuit limit for 477 stocks. But we'll address the market open for you first. We were looking at a positive start coming in for Nifty 50, 18,650 level. Well above that, with gains of around 0.3% out there. Slowly and steadily inching up in early deals at the opening deals. Let's talk about Bank Nifty Index. That's the one which has also been catching up with the uptrend. And that index is holding up with gains of around 0.25% out there. Talk about the sectoral indices that we have in terms of also the mid cap and the small cap performers out there. Well, mid cap index, you can clearly see the traction building in for mid cap with gains of around 0.5% out there. And for small cap, that's also holding up with gains of around 0.5%. In terms of the other sectoral indices that we have on the list right now, IT index, well, that's holding up after dropping that we've seen. Gains of around 0.5% out there. Auto index too is trading higher and it's speeding up with gains of around 0.5% out there. In terms of metal index, that's shining with gains of similar quantum. And if you talk about the other sectoral indices that we have on our list right now, pharma index, nearly around that 0.5% seems like a number that most of the sectoral indices are holding up. Consumption story remains intact with similar amount of gains coming in, and Fmcg Basket too has been showing some strength in the morning deals. Realty index, that's also pretty much pacing up in line with most of the counterparts with gains of around 0.5% out there. In terms of advance and declines that we have, 38 advances as compared to 12 declines on the index for Nifty 50 right now. Well, the market breadth pretty much seems to be in the favor of Nifty 50 advances right now. And let's look at the top gainers and the top losers that we have on our list right now. We have already spoken about Adani Group of companies and the circuit limit being revised there, but the gainers today are much from the basket, FMCG basket, be it Britannia, be it Nestle India, be it Power Grid India. Well, that's a different one. DV's Lab, Infosys, and Ultratech Cement. Now, Ultratech Cement needs to be pulled up further in detail because that's the one which is actually holding up for you for quite few sessions out there. Adani Enterprises, Bajaj Auto, and Apollo Hospitals. That's another one on our list right now. Remember, we've already highlighted Adani Group of companies. And in terms of the losers that we have on the list right now, Grasim, that's the only one which is probably, the list needs to be updated there, but Adani Group of companies continue to remain in focus. In terms of what we have for the other stocks and news, Valiant Organics, the company's subsidiary, has filed in for an IPO and is filing a DRHP with SEBI, and the proposed IPO comprises a fresh issue of up to 1.15 crore share. Gravita India, where the promoter has been offloading more than 1.5% stake. Let's be precise about that, 1.88% stake. And it's sold in around 13 lakh shares, and that's at a price of around 586 per share. Jupiter India, that's been buying and has bought in stake for around 1.44%, and it's roughly around the range of around 585 per share. An upgrade coming in for Teamlease. That's after a while that we've seen an upgrade coming in. MOSL is a brokerage out for there, and the target price is to an extent of 2,890 rupees per share for Teamlease. It says that the brokerage says that it's turning a positive on attractive valuation and the long-term growth outlook. It expects the revenue growth to accelerate to 21%, and the growth is aided by the recovery in IT services and gradual margin recovery. Coal India, that's another one that we have on our list right now. Following to the OFS, FTSE has announced an increase in the free float. That's effective today. This will lead to an inflow of approximately $18.5 million. The adjustment, like I suggested, will be on June 7, 2023. So do keep an eye out on Teamlease. Do keep an eye out on Coal India. That's the one that we have on the list right now. But if you could also address in the Nifty top losers out there, just to see if that list has been refreshed and updated. In gainers, of course, we have the entire basket, the FMCG basket, which is shining in bright. Rajesh, come in on this one. What do you make out of the FMCG counters right now? And also a word coming in on your recommendations for the day.
Look, definitely FMCG basket is showing good buying interest since last couple of trading session, and we believe that Britannia is the stock where one can focus after today's opening. Stock is showing good buying interest, and looking at the overall setup, we believe that Britannia can continue furthermore upside. We are projecting target of 48.50 to 48.70 for trading point of view, and one can keep its stop loss of 47.50 to buy Britannia. And we believe that the defense stocks can continue furthermore, and HAL one can keep on their focus. Stock is enjoying their all-time high trajectory, and series of higher top, higher bottom formation is there. Long build-up is clearly there. So HAL is also buy for upside target of 35.50, 35.60. Keep stop loss of 34.55 to buy HAL after this today's opening.
All right, so HAL is the one which is making it up from the defense basket per se. But do you like anything else apart from HAL? BEL also is one of your top recommendations out there. Would you want to talk about that? Apart from Ultratech Cement, which has been showing, the entire cement basket has been showing some traction out there.
Yeah, so clearly BL is also a clear buy. Signal is there. Stock managed to do breakout of its previous swing high of month of September 2022. So which clearly shows that now stock is moving to the new trajectory. So BL can continue further higher, and upside target we are projecting around 226 to 228, 126 to 128. One can buy with stop loss of 114. Another space which we like, that is from NBFC space, and Canfin Home is another stock where we are focusing here. Canfin Home is also moving in higher top, higher bottom formation. Almost stock is enjoying near to its all-time high trajectory. We believe that Canfin Home can continue furthermore upside towards 765, 780 zone. This is also buy with stop loss of 715.
All right, that's the word coming in terms of the Nifty top losers that we have on the index right now. It includes the likes of HCL Tech, ONGC, Bajaj Finance, Grasim and Bajaj Finserv. So clearly, Bajaj twins out there are the top losers that we have on Nifty 50 index. Rajesh, do you think it's a buy on dip strategy coming in for these two as well?
Yeah, we have seen significant recovery in both of the Bajaj, this Bajaj twins stocks, and looking at the setup for Bajaj Finance, yes, we do believe that if you get any opportunity to buy this stock near to 7050, 7030 is a good support area for near-term trend. So if you get a chance to buy a stock around those levels, you can buy with the stop loss of 69.85. And for Bajaj Finserv, still setup is bullish for near-term to short-term. And we do believe that if stocks continues to hold above 1455 level, then possibly again we may get buying interest in the stock, and possibly stock can scale up further higher towards 1520, 1540. So both stocks in buying zone. If you get any chance in decline, you can buy both the stocks.
All right, Rajesh, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. Well, let's address the fundamental side of the story. There are a couple of things which have been buzzing. The markets have been doing well. FII's flows have been positive for 3 months in a row. DIIs, to an extent, have remained seller, but the yield, the spread between the India and the US, it's the highest since June 2009. On that note, let's actually bring in our guest out there, Chintan Haria, who's the head investment strategy from ICICI Prudential AMC. Join us. Good morning there.
Hi, Nickey. Good morning.
All right, so I was just talking about how FII flows have been positive for 3 months in a row right now. They've been the sellers on Indian equity markets for a couple of years. And this year seems to be an exceptional year coming in terms of the FPIs, investments also, which were at 9-month high in the month of May itself. But the 10-year yield spread between India and the US, it's the lowest that we have since June 2009. How are you viewing the markets right now?
So if you look at the last 8 years, Nickey, we've seen FII outflows almost 6 years out of the 8 years. If it's not FIIs which are driving the market, it's essentially the Indian investors, domestic investors who are driving the market. It's no surprise because post-demonetization and the kind of returns that the markets have made, at the same time real estate market slowing down, has brought in a larger part of India into the formal investment into equities through the mutual fund route and otherwise. And I think that is also elaborated with the 10 crore demat accounts which are existing. So we are only seeing the start of a cycle which basically is into the investment of domestic investors in equity. As far as FIs are concerned, they did sell a lot between October 21 right through 2022. What we are seeing in May is the culmination of the fact that interest rates globally may have peaked out. And if you look at Asia versus the developed markets, Asia's GDP growth rate is twice of the developed markets, and Asia's interest rates are probably, or inflation is half of the developed markets. So I think on all parameters, Asia is standing out. And within Asia, if you look at it, India, Indonesia, and Japan are the three which stand out in terms of long-term investment opportunities which are there. India, of course, being the best investment opportunity that is there.
Yeah, even with that in perspective, Chintan, it still looks like, India is probably the most unloved market rally ever at this point of time. S&P is up around 11% this year, almost 20% from the October lows. But if you talk about the market breadth and the participation that it has overall in terms of rally, that has only narrowed down. Do you think that could be a potential problem out there?
So I think if you look at India in 2021-22, especially the second half of 22 leading up to March, April 2023, we had outperformed the Asian peers as well as US and developed markets in Europe meaningfully. And now they are catching up to an extent. So if you take the baseline as last 6 months, yes, India has underperformed. But if you stretch it to last 3 years, then probably our underperformance will not show, because 2022 India was an outlier in terms of its performance. Going ahead, we do believe that from here on, the incremental premium that India had in terms of valuations is no longer there. And to that extent, we will mirror or at least give as much returns as the Asian markets. And developed markets, we are not very positive on, though they have shown good results in the last 6-8 months. But the impact of high interest rates in the developed markets which are there will be shown in terms of probably slower GDP in the next couple of quarters. So we will see the GDP prints of developed markets, especially the US, come down meaningfully in the next 2 quarters because of the higher interest rates that they are facing right now. But countries like India, the GDP trajectory can continue to remain strong, which will help our profitability, our earnings, and in turn, the market performance.
Sure. Chintan, financials and autos along with FMCG, they've clearly dominated the trade going until now. I mean, these are the thematic themes I'm talking about. But within the space and Indian equity markets, which are the themes that are of your interest?
Yeah, so within Indian equity markets, clearly, as you mentioned, financials stand out. They've seen 8 years of write-off cycle. Now the pickup in credit as well as the performance of financials improving. Not just the financials, but their subsidiaries also have gone through the financial service subsidiaries have gone through a correction phase. Now they are also looking up post the pandemic, be it in general insurance or in life insurance. We do believe that apart from financials, of course, financials are a reflection of the economy in general. But if you look at autos, if you look at capital goods, if you look at export-oriented manufacturing, all of that is showing up. And in the long run, in the next maybe 6 to 8 years, if you look at it, whatever measures have been taken in the last 3-4 years will reflect in terms of better logistics, better manufacturing. So domestic manufacturing is a very big theme, which we believe will not only help import substitution but also growing exports, as can be seen in electronics and in capital goods, even in auto ancillaries. So India is going to become a hub for exports as well because of the better manufacturing capabilities. Of course, the electricity sector is a backbone of it. So we do believe that the power sector, which has had its share of consolidation for the last 10, 12 years, can also be a big winner in the near future. Thank you.
Sure, Chintan. I'm sure you're not going to be talking about stock specific to be specific, but in terms of the schemes that Prudential AMC has been holding up, and with export-oriented manufacturing remaining, being at the helm of the interest within the portfolio, which are the stocks that ICICI Prudential AMC has picked up?
So if you look at within the portfolio, we've increased allocations to pharmaceutical and IT in the recent past. But apart from that, manufacturing as a theme has remained strong. Power utilities has been something which has been part of the portfolio, and we continue to believe it in strongly. And telecom, which has gone through its consolidation, continues to be a preferred space. So all in all, there's no specific sector which has a very big preference. The good part is India, all the sectors are firing on all cylinders. Auto, for example, we've just crossed, I think, 4 million sales annual, and probably catching up to China, which is almost 26 million in sales for the next many years. So if you look at our portfolios are aligned towards, at a macro level, many sectors in India doing well, but specifically power, telecom, manufacturing, pharma and IT. These are the sectors. IT recently we've been adding, but other than that, the first four sectors are pretty much what we believe in will take us higher. And of course, oil marketing companies and oil and gas in general has gone through a lull phase in the last 1 or 2 years. We do believe with the changing dynamics of oil prices coming down, marketing margins improving, that space can also look well, which is the oil marketing space.
All right. So oil marketing, IT and pharma, these are the ones which essentially are finding some flavor when it comes to the ICICI Prudential AMC. But ID stocks, they were in line of fire on Tuesday after US IT service firm EPAM System, it's cut its full year guidance even before the second quarter ahead. Back home, investors have not quite been able to make up their minds over the sector. There are occasional rounds of selling which we've been seeing at a slowdown, at any given sign of slowdown in the US or for that matter the European economy also. But these stocks have managed to find buyers at lower levels. Sure, you are pretty bullish on the IT space right now, but between mid-cap and the large caps, where are you more interested?
So IT sector is obviously going through its correction phase because predominantly it relies on the growth in US and Europe. And as I mentioned, US and Europe are going to go through their, let's say, correction phase, consolidation phase or contraction phase because of the higher interest rates. And that will reflect in probably slowing down of the growth of IT. But Indian IT is not going to go in terms of contracting over the next years. They will continue to grow. The growth will be muted for the next couple of quarters, maybe next 1 year or so. But that is on the back of great 3-4 years starting from 2018 that they've had. So Indian IT from 2018 to 2022 got re-rated from, I think, 12p to 27p. Now they've corrected to sub 20p, at least the large caps. And we do believe that in small and mid caps, there are niches which each company has and they have their own different ways of performance. But at least in the large cap space, after the kind of correction that we've seen, the overvaluation has now come to reasonable valuation and probably 1.5 year more of consolidation. It is a sector where buybacks are common, where the cash flow generation is strong, the management quality is good. So we do believe the large cap IT can be built over the next 12 months. And this consolidation phase or the slowdown phase will then probably converge into probably a growth phase.
Sure. Chintan, if I was just supposed to ask you one last question, which was between the defense and defensives. Now, within defensive, you said pharma and IT are the two sectors where the AMC has been adding up more exposure. But between the two, what do you find more attractive? Is it the IT, which has seen the drubbing, or the pharma, which these days stocks have been announcing zero declarations, zero observations coming in from US FDA? where is the interest more? And also the defense sector, something in the like of HAL, BEL. It is an election year, pre-election year. Do you see more of momentum building in terms of order book of these companies?
So, yes, as far as pharma is concerned, we had built it earlier. Tech we are building now, so both are equally good in terms of our outlook as we speak right now. Pharma, obviously, the domestic pharma sector continuing to do well, and to that extent, the correction in pharma stocks presents a good opportunity, especially the mid-tier pharma companies. If you look at from a defense perspective, India exported close to 15 to 18,000 crores worth of defense equipment last year, which was something which we wouldn't have otherwise believed. And it is a fact that we are moving in the direction of indigenization of many of the defense equipments, be it fighter planes, naval ships, submarines, etc., which is good from a currency perspective as well as also from a security perspective. So to that extent, the defense companies have already shown the order books and the re-rating potential. They were cheap probably, now they've become reasonably valued and building in a lot of the growth that will happen in the future. But it is a sector where the budgets of the government, the central budgets, are going to increase as we see our GDP grow and as we see the need for securing our borders, etc. So defense is a structural sector. The stocks may behave with the vagaries of the market and the ups and downs, but as a sector and the focus of the government to indigenize, it has got a good potential in the future. The valuations currently for some of them may not be cheap because they've seen a significant rally. But any meaningful correction, the defense sector does become a sector which investors can look at.
All right. So that's the word coming in from the defense, for the defense and defenses. Chintan, thank you so much for taking out the time and speaking to us this morning. It was indeed a pleasure having you. Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching, and please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.